Hey guys, welcome to Ducoscopy weekly outlook on risk and commodity pairs. Today, Monday, June 8th. Just make sure that you read the disclaimer. And today we have lots of agenda. So, just from Friday, I was discussing something. So, to take it further, so today I'll be talking about economic data to watch out for the week, and then currency debasement and modern monetary policy, that is also called as MMT. So I was mentioning like S&P can go to 4,000 and 4,300, also. So I'll just do these things. I'll explain this because in the current scenario in 2020 uh, decade, we have to understand what government policies are impacting major currency pairs and asset prices also. And after that, I will cover this usual risk and commodity pairs direction for the week. So just now, so what economic data to watch out for in current week? Just now, just yesterday or today, GDP from China had come, so it is almost around zero. It is not that much because China is not that much impacted by coronavirus. And then Euro industrial production. So if you see, for the week, we don't have much data to vote for. But GDP data is coming, and most of them are from Q1. And then this China Consumer Prices Index on Wednesday, June 10th. After that, this data, CPI data, Consumer Price Index from US, will be closely watched. And of course, your FOMC meeting is there, and their rhetoric will be watched. So this why consumer price index is very important right now, and in the coming months, because market is expecting that there will be inflation because of these expansionary prices, monetary policies. So I'll explain that what is happening in the market right now. And then, of course, every week we have initial jobless claims, and that is on Thursday. And to close the week, we have GBP industrial production and GDP, and then USD Michigan consumer sentiment index. That is all scheduled on Friday. So right now, efforts are on the way to end the lockdown, and so our economic engine will be slowly at 100%. So we are just expecting best case scenario that second wave of this coronavirus pandemic doesn't happen, and everything is in place before that, all medical facilities and all. Fed meeting is of course there, and then Ms. Lagarde testimony today, that is there. So she will testify how justified is their PEP program. So they are expanding a lot. They are like injecting a lot of money. So how she will justify before the Senate or before the court, and then China growth fears are there in the market for the week. So how that will be impacting the market, so that will be seen. And Brexit is always in the news for past 2 3 years, and is still right now Brexit. UK will has gone out of EU, but these Brexit deadlines is still that trade deal Still, that is right now focus of this Brexit. And right now, the main theme which I was discussing last Friday. So, for developed countries, this fiscal conservatism. So, right now, government is not going for a low fiscal deficit. So, they are targeting that is a policy for the past. And right now in 2020 decade, because of this coronavirus, government is spending and economic revival, at least for next 3-4 years, is the theme, is the market theme. At least US GDP is not coming to pre-corona virus level for next 2 years. So this will be government spending, and this QE will be theme. And if you see, if I just give an example, if you see Amazon stock, so their PE ratio is at more than 100. So how justified is that? Because if you see in the same space, almost same space, tech space, Google, Apple, their P ratio is around 30, and Amazon, P ratio is more than 100. And why is that? Because a market, their capital expenditure called capex, that is very high right now. They are funding lots of projects. This market is expecting that more growth will be coming for Amazon, and that is the same kind of thing right now government spending will do. So of course there are many critics for these things, this modern monetary policy. So let's just see what it is, and how it will be impacting the market in the coming years. So right now, if I say currency debasement, right now, USD is weakening, and in the coming days, USD will weaken further. And what is debasement? Currency debasement refers to lowering the value of currency, and what it does, debasement gives more money to government for spending, and it results in inflation. So a case in point is Japan. So still I'll touch upon that, why what is happening in Japan. And by debasing their currencies, government believe they can meet their financial obligation more easily and have more money to spend on infrastructure and other projects. This further benefits the government by making government debt easier to pay off. And today, if you see, most currencies are fiat currencies and are not based on precious metal. So earlier, till 1971, it was pegged with gold. But right now, after that is gone, right now, what some countries have to do, they just have to print more money, or they can increase the money supply in digital accounts. So that's what happens. And right now, what is happening after coronavirus has hit and this lockdown has started? So coronavirus hasn't created any problem for government, but what the problem which was created, that was because of this lockdown. And economic engine that was completely shut down, and because of that a lot of there was no consumption and job. Last week we had seen that job growth in US, so joblessness rate at least has shot to around 13%, even if NFP was very good, but still it is in within 2-3 months it has things has changed a lot. So what is this modern monetary theory? This is macroeconomic theory, and that is like says that fiat currency can be continuously issued by a central bank to achieve full employment without a traditional regard for budget deficits or risk of inflation. So right now, that's what I am saying. All these developed countries, they are just going for this. They are not caring for fiscal deficit. And right now, this Japan is the poster child for this thing. Japan has been doing it a lot, and but the problem with Japan, they had a lost decade, and from 1999, probably they had taken this kind of decision too late. So they had a lot of debt and deflationary pressures on that. And after that, they started, and they are still finding many issues how they are implementing, and right now, we will see that happening around every developed country. So I'll show you that more on that. So what are MMT tenets? Like government that issues its own fiat money can pay for goods, services, and financial assets without a need to collect money in form of taxes or debt in issuance in advance of such purchases. Cannot be forced to default or on debt denominated in its own currencies. And it increases inflation, and the main purpose of it that full employment is achieved and GDP growth can be achieved because on this is main principle of modern monetary theory, and they they feel that they can control inflation by taxation and bond issuance, which removes excess money from circulation. So this is the main thing which is right now currently driving this Australian USD upside also right now, Australian Japanese upside also, and then the stock market upside also. So when in 2013, this policies has been introduced in Japan, there was a 57% increase in this stock market. So same kind of thing will happen right now in the market. And right now, if we quote former Fed Chair Alan Greenspan, he said that United States can pay any debt it has because we can always print money to do that. So there is a zero probability of default. So Alan Greenspan was Fed Chair till 2008 before Ben Bernanke, and he was saying that. And there is also after Great Depression in 1930s, and we had seen like these kind of policies has been in effect, and then one of the countries which followed this was US itself, and there are many other things and these kind of theories. So I'm not an economist, so I'm not going into detail why this can be very challenging or what are its drawbacks. So I'll just explain what this kind of things is, and right now what is happening in the market right now. So there is one thing, monetary aggregates, that is called M2. So M1, M0. So M2 is very important in current scenario, and That is all M2 is: physical paper and coin currency in circulation, money market shares, and saving deposits. So, what Federal Reserve uses money aggregate as a metric for how open market operations, such as trading in treasury security, affect the market economy. So investors can measure the money aggregate rate of change and monetary velocity overall by M2 data. So this is widely available in the market, and investors can see how the money aggregate rate of change is there, and monetary velocity overall. Studying these monetary aggregates, they can get the information on the financial stability and overall health of country. So if monetary aggregates grow too fast, that can cause fear of overinflation. And also one more thing is there, money multiplier. So if you want to read more about it, so there has been, like in 2010 decade, if you read Zimbabwe, so they have gone to 70% inflation and all, Zimbabwe and Sudan. So why that has happened? So you can read further on that. And right now, what is happening in US right now? So Uh, so this is a title like printing press and M2. So what has happened previously and what is happening right now? Since the end of Feb 2020, Fed balance sheet has already grown by 60% and is on track to more than double by the end of year 2020. Bank of Canada has already tripled its balance sheet, and RBA, Reserve Bank of Australia, has allowed its balance sheet to increase by 43%. And Fed money stock data, that M2 that I was just talking about, that has rose by 18.5% over a year ago. An unprecedented pace of growth in the history of weekly time series starting from 1981. In this financial crisis, that has never gone about 10%. And in case of Japan, from 99, it hasn't gone above 5%. So that is all the data right now. And it is likely that this is a money supply. So it is likely that annual growth in M2 will continue to increase to somewhere between 20 and 40% by year end. And what has happened during World War II? Maximum it increased to 27%. So you can imagine how this is 20 to 40% by year end if it is increasing. That will certainly cause this inflation. So that is the point of concern. And right now, if governments are providing, and right now in UK also, they are just saying like QE is right now deferred to third quarter or fourth quarter, but still they will certainly do this QE. And right now, if you see the data, right now this money supply, this M2 growth, so that is 27% during World War II. And right now, if it is going to 18% till now, and if it is increasing, that will be higher than 27%. So right now, what I foresee, like the kind of things which has happened during 1970s when inflation was high, interest rate was high. So that kind of scenario can happen. So that is the case for gold. That is the case for Australian Japanese and Nasdaq also, stock market also. So you have to see all those things. Now, coming to next slide. This is the last slide, and I'm not pushing it more because this is how the government works, and they follow these kind of principles, these kind of monetary policies. And there are two things. There is MMT, modern monetary theory. So what these developed countries are doing, they are adopting MMT, and what Japan has adopted, they are just following modern Keynesian or Keynesian. So only difference between these two kind of economics is the MMT is more like control of money in the economy. So if economy expands, they will increase the taxes. So that's how they control the money flow in the market. While Keynesian economies involve government expenditure. So right now, in Japan, they are just focusing more on government expenditure. And in all the developed countries right now, debt to GDP ratio that is going above 100%. So I think I have covered this thing. So if you want to read more things on this, what are the drawbacks, how government economies work, so you can just focus on these things. So I thought it is very, very important, like we understand these things, at least in 2020, we can understand these things. So any questions on this, you can ask me. Okay, now coming to uh, like regular feature, what I does daily, risk and commodity pairs right now. So right now, if I see, I'm onto the charts right now, and if you see, the stock market is again stabilizing and it is going up. So for the day, it is 0.54% up. And still, if you see, US is again trying to pass the bill, which will inject at least $1 trillion into the financial system. So that's what I'm saying. This M2 money supply that will be around 20 to 40% by the year end. So that is very, very alarming. And US Dow Jones right now going to 27,300. So we were watching for V-shape recovery, but this is not a V-shaped recovery. This is a rocket. So it is just going up and up. So somewhere I was reading right now it is even dogs and cats are buying their stocks. So why they are buying their stocks? Because of these easy monetary policy from the government. So it is not just random. It is not just shortest case. It is because of monetary policy from US, monetary policy from Eurozone. They are also providing a lot of QE. So DAX is also touching 13,000 right now, will be touching. And in the coming days, in the coming months, by the year end, I'm just seeing it going above 15,000 also. CAC is also the same. So the stock market right now is bullish. Australian penny right now, even if it is overextended right now, 81% on daily. So that is a lot, Australian Japanese. But still, it is stabilizing. So let's see how far it can go. And one thing is that this right now in this 30-year bond yield that is going up. So that is a cause of concern right now. So if yield is going up, then this interest rate scenario also doesn't look good. But still, this is there are many dangers if we employ such kind of policy, and growth is very much required in this case kind of scenario. Gold is still, I would say, it is still bullish, and there is a case of inflation in US right now. It has gone so much down, like this, like in March and April, and right now it will take some time, but it will certainly create inflation in coming days, and that's what right now gold has a good case for going to around 1800 or 1900 also in coming days, maybe a year or so. And tech will be benefited by it whenever this kind of policies happen, like funds goes into stock market because yield is very low. Everybody will then start buying stocks to get something like some yield on their investment or their money. So that's what happens. And right now USD Japanese also about 109, and that is because of yield is going down and USD Japanese is going up. And if bond is selling off, then USD is right now slightly taking benefit of it, and that's what happens. And right now, let's see, Euro USD. Euro USD is at around 112. Still, it has gone to around 1.13 1.1370 around, and for 9 days, for 9 days in a trot, it was just going up, so it can just stay here, stabilize here, and then further take an assault. So going through this monetary policies, and my case is that Euro USD will be going to around 1.25 by the year end, or maybe by next year, but there is a very good case like USD will be weakening, and that's what Mr. Trump also wants. And he was just mentioning like everybody is weakening the currency, and we should also do that. And he is getting what he wanted. So coming to this thing more. Now, if we see USD bond is still for the day, it is going down. Australian Japanese is still for the day, it is positive. The stock market is, as I said, it will be going, and it will be going above 3,400 also previous high already. USA Tech, like normal Nasdaq, not the Nasdaq 100, has already crossed over its all-time high, and gold is gold base is at around 1650, so it is still bullish about 1650. So all in all, it is still risk on market, but market is just consolidating. So Euro USD, now coming to Euro USD, right now going above this weekly level right now. So last to last week on Friday, I was saying, okay, it has gone above 190, and last week what we saw, 400, 450 pip on the up, and in the process, what it has done, like it has crossed above EMA 89 also, and if it is coming down for the week, and it is very important, like it is above 121.81. So if it comes down, so you have to buy it, and don't try to sell anything right now. Even if it is consolidating, just see where it is coming down. But even then, like I don't see anything. If it has crossed for the first time, it should stay above 121.80. 121.80 is the level for it to maintain for this week. for further gains. So still it is bullish. Euro Japanese is still bullish, and I don't think it will be coming to this, even if it is overextended. And right now, RSI is slightly coming down, so maybe it will come down below 70. But in any case, it will find buyers around 121.80. And next target is right now is still not much is visible right now. It is overbought, heavily overbought, and after the breakout, it will just stabilize here with a bullish bias. Let me just see. On daily, still it is very overextended, and on 4-hour chart, maybe we can see right now on 4-hour chart. This EMA 34 right now is at around 122, and below this 120.10. So if it is staying about 123, 120, 250, also slowly this will also uh, be going up. EMA 89, this will be also going up. So just make sure still Euro Japanese is bullish, and for the week it is bullish about 121.80. Okay, now the next thing is GBP Japanese. And last week I was saying, on Friday I was saying when it was at around 1.3820. So I was saying next target is around 139.26, and in fact, but risk reward is not high. So even you can buy that time also for 100 pips or so. It went to around 139.50. And I know the level from where we should start buying at 136.52. So 200 pip from here. But challenge for GBP Japanese to close about 139.26. If it can, then 1.143 is the target for GBP Japanese. Still, I would say for weekly also, OSMA is on the positive. Let's see, OSMA on Euro Japanese for 2 weeks. OSMA is about 0. So that is very positive. If you see how OSMA works, so here even if it was OSMA is always positive till here, and every time it was coming down, it was getting bought. So right now, if it is coming down, Euro Japanese, you have to buy. If GBP Japanese is coming down, you have to buy. And on daily also, it is overextended, and right now this is RSI is around 71, so it can correct. It can correct to 136.50, but I would say these Japanese pairs, don't try to sell it right now. Just try to see till where it can come, and then we have to initiate a buy position. In this case, right now, weekly level for this is 136.53, and high is 139.26. And for this week, we have to see whether it is closing above 139.26. On daily, still, I would say, still EMA 34 is still not has gone above EMA 89. So still, it is not that bullish as Euro Japanese. Let's see on 4-hour chart. Right now, first thing is here 136.70. It can come to this place 136.50, and then you can initiate a long position there. Don't try to short it even here. So that's how GBP Japanese is, and GBP is not that bullish, but Australian USD is bullish, Euro is bullish, and there are some concerns about GBP right now. And once this QE uh, comes, then only we will see how this behaves. Australian USD right now, well, like even last week it went from 0.6640 to 70. So at least 380 pips. That was around 5% or so. So right now, these lines, right now, it is very, very far on 4-hour chart, but still it is staying there, and slowly what will happen, these lines will be going up. So this is also very, very bullish, and I know weekly level, that is 68, 0.6860 is the level. If it is coming down, and you have to initiate a long position right now on this. So this also cannot be sold right now, Australian USD. And if it is coming to this level, or if it is closing below this level, then only it is a sell. So let's see what happens, but it is right now just within, it is consolidating above 0.69 right now. That's what we can say. It tried to go above 0.70 30 level. That was last December high, and I know that will also be broken in coming days. That's that's what we can say, and I know maybe this NFP, this FOMC meeting on Wednesday, that will decide its fate. So that's how Australian USD on 4-hour chart also you can see 68.85 is the level on 30 EMA 34, and it is continuously above this level, and being above this level is very, very positive. Slowly this is EMA 89. So last week if we see 6 into 5, 30 EMA lines. So this week, if it is staying here right now, so this will be coming more above here around 68.14 or 68.50. So that means it will be finding more support if it is just trading near here. So 89 periods means if it is staying here for around 2 weeks, 2 weeks, 2 weeks, then this will be going up. So this will be then providing it support. So Australian USD is also bullish, and for the week we can say right now it is bullish about 6860. So again, this is not happening. Even if it is very, very bullish, RSI is in overbought 78, but still it is not coming down. So maybe after FOMC, this will take some correction, but still it is not coming down, and don't try to short it, seeing that it is highly overbought. USDCAD, right now USDCAD can be a candidate to buy, because the level which is providing it support, that is nearby 1.3376, but that can also be broken on weekly. You can see right now it is providing support for the week, but OSMA is below zero, and it means that this level can also be broken. So that's how USD CAD is. And right now, if it is going up 1.3610, 200 pip from here, you have to sell it. Last week closing below, let me just move this. So last week, if you see the candle, last week it dropped by about 400 pips, and it broke below this level also, 1.36, and after that, once it broke Next support, it got around 1.3375, and right now you don't have to find the bottom right now. You have to let it bounce and then sell it. So don't try to buy it. It can further break this level also. So here, and once this level 34 EMA is coming below EMA 89, then it will be more bearish for USDCAD. So right now there is a race for providing liquidity in the market. So balance sheet also, I was mentioning balance sheet of CAD, Canadian government, Canadian Central Bank is also three times for 3 times more than 2 times more than what it was in February 2020. So if it is going to 1.35, 24, 161%, so you can sell it, or on this chart, still it will take some time to bounce from here, but on weekly, it has to be closed below 130, 1.36. So that is USD CAD for you. And then USDCHF. So USDCHF, I'm not very enthusiastic about USDCHF right now, and you can see right now why I'm not. And for 2 weeks, it will not give any real indication, and that is because of Euro CHF is moving. In any case, USD CAD on weekly is bearish, but it is not going down further, and it is bearish below 0.9720. But last week, this two candles, if you see, weekly candles, and for this week also, they are even Euro USD was going up, USD CHF was also positive for last. So that's how it is for USD CHF, and the level which we are watching right now 0.9662, and that should be the level, but it is bearish from 0.9773. Euro CHF, it went above 1.09, so just 2-3 minutes more. And if you have any questions, please let me know. So Euro CHF right now, challenge is for Euro CHF to go above 1.0943, and on the downside, if it is coming to 1.0730, you have to buy it. So that is still 130 pip. So you can see it on 4-hour chart also. Maybe it is overextended, overstressed, and this candle for last week was very sharp, and right now SNB was saying they were very concerned when it was reaching 1.05. They must be very comfortable right now, and soft floor for Euro CHF is right now 1.05. CHF Japanese again right now it tried to go above 114.50, but right now it is selling off, and maybe it is a false break. But the thing is, if it is coming to 111.64, buy it. So that's how it is for CHF Japanese and USA Tech. USA 500, like this is monthly. What has happened? Nothing has happened for this USA S&P. So even after 2 months also, this line monthly this is, and weekly if you see right now, that's what I was mentioning. Like RSI 14 is around 59, and I know again for the week, it is positive, and nothing as damaged. And EMA 34, 2 weeks, 2 months back in March, 2 3 months back in March, it was above EMA 89, and again it is above EMA 89. So it was just a kind of flat crash, and right now again USA 500 S&P is going up, and I don't think this like Fed meeting on Wednesday will have any effect on US stock market, because if they have started this QE, they will not stop it in any case, because they know if they will do it, they will create money supply problem, and liquidity issues are there. Then again market will not get a good cue from it, and then this can tank. So if they have started, they will see for even for a year or so. So that is not a cause for concern right now. USA Tech also, this can again, I was saying it can even go to 10,000, or it can even go to 12,000 also by the end of 2020, looking at how the monetary policies of the world right now. And if there are some unforeseen events like second wave of coronavirus and lockdown again happens. But the thing is, right now, government has expanded their the problem in Feb and March was they haven't expanded their medical facilities, and then they had to lock down the economy, and that's why this has happened. But lockdown was necessary at that time. The government wasn't fixed what to do, and right now this medical facilities or everything right now is in place. So I don't think that this lockdown will happen, and slowly, gradually, this lockdown will be be over, and every country, it will take time, of course it will take time, but every country will be growing because of these monetary policies. So that's all for the day, and let's see, to start with, if you have any questions right now, so you can ask me. And right now, to start the week, right now, very slow market right now. But once things pick up, once traders from US joins in, then we can see some volatility in the market. So let's see what happens. So just join me tomorrow for daily this risk and commodity pairs analysis. So take care, and bye bye.